Good morning, good evening, good afternoon. I'm Walt, and in this video, I wanted to review this article entitled More Than 7 Million Americans Are Seriously Behind on Their Car Payments, written by Sarah O'Brien and John W. Sloan. I'm going to read and elaborate on some important key points and provide the link in the description where you can find this full article. More and more people are buying too much car for what they can afford, said one consumer advocate. Despite an expanding economy and a near historic unemployment rate, millions of Americans still aren't paying their monthly car loan. This is important because this could be a serious indication of a possible recession. If unemployment is low and the economy is expanding, but yet car payments are not being made, this would suggest that a lot of Americans are unable to afford it. However, they are still being approved for these loans, which was one of the driving forces of the previous recession. At least 7 million Americans were in serious delinquency on their car loan, 90 or more days behind at the end of 2018. According to data released Tuesday by the Federal Reserve Bank of New York, that's 1 million more than at the end of 2010 after the recession. Now, as Americans' appetite for new cars continues unabated, an advocacy group is sounding the alarm over the growing level of auto debt carried by U.S. consumers. In a report issued Wednesday, U.S. PIRG warns that the continuing rise in auto debt is putting many consumers in a financially vulnerable position, which could worsen during an economic downturn. More and more people are buying too much car for what they can afford, said Ed Marinsky, Senior Director of U.S. PIRG's Federal Consumer Program. That is a very, very, very powerful statement. More and more people are buying too much car for what they can afford. All right. Whenever you plan to purchase a car from a dealership, there are two numbers that you must determine before you enter any dealership. Number one, how much can you afford to pay for a monthly car payment? Determine your monthly expenses and subtract that amount from your monthly income. Number two, you must determine how much you can afford for full coverage on a different car. More than likely, your insurance will be more than you're currently paying, especially if the model of the car is newer. I would suggest getting some quotes based on year, make, and model of the cars you're interested in buying to come up with a ballpark figure. Once you have that number, you can make a more financially sound decision when deciding what car you want to purchase. Right? Let's move down in this article to the next item that I want to touch on. Part of the overall growth in auto debt comes from consumers shifting preference for larger, more expensive vehicles, such as trucks and SUVs, instead of sedans or compact cars. The average price of a new vehicle is now about $37,100, compared with $27,573 5 years ago, according to auto research firm Edmunds. So, in the past 5 years, the average price of a brand new vehicle has jumped basically $10,000. There are a lot of certified pre-owned cars with very, very low mileage and are far more affordable. This should be an option that you consider when determining how much you can afford when purchasing a vehicle. All right. The last topic or point that I want to bring up from this article is right here. There are some illustrations that the article pointed out regarding interest, and I think it's important that I touch on this a bit. So, to illustrate the difference that the interest rate makes, if you pay 4% on a $30,000 loan over 72 months, you're going to end up shelling out close to $30,800 in interest. Now, that's at 4%, right? If you have a low credit score, I am guaranteeing you that you will end up with an interest rate in the double digits. So if you have a 10% interest rate, at least 10%, you're looking at paying more than $10,000 in interest in the length of the term of the loan. If you have to finance a car, no matter what the interest rate is, have an account where you add money daily or weekly that serves as an extra car payment each month. If you're having any difficulties with finding ways to save or how you can save, please look at my channel. I have 2 videos. 1, increasing your daily savings amount, and 2, how to save. You know, the first 2 videos that were made on this channel, though, that's a great starting point. You can take a look at that. If you have any questions, just leave a comment. All right. The more you are able to pay monthly, the more that will be added to the principal of the loan, allowing you to pay the loan off sooner and ultimately saving you from paying the full finance charge. So if you're able to pay more on your loan each month, that means that whatever is left over after the finance charge, that goes straight to the principal. So the more money that you can get on the principal, the more the loan shrinks. The faster the loan shrinks, the shorter that you have to make the payments. The shorter time that you have to make the payments, the less finance charges that the banks are able to charge. If you are not in the immediate market to purchase a car, you can start saving for it now. And when that time comes to buy, you will have more money to put down, which means less money you will need to finance. Or, and this is something that I advocate for tremendously, you could be in a position where you save so much money that you are at a point where you can buy the car outright and you don't have to worry about any financing at all, which means that you save thousands of dollars that you can use for your retirement savings, you can use for a home, and most importantly, that money will not go to the banks for interest. If you come across any articles you would like for me to make a video, you can email or leave a comment. Please like, share, and subscribe. I'll talk to you soon.